QE3 has been passed. The S&P 500 is going to go up to our target 1470. What took the financial crisis down is that QE3 has been passed by the FOMC. This is going to change where we would say now that pullbacks will be bought and a new bull is trying to get born. And I can tell you that they're going to be purchasing mortgage-backed securities at a pace of $40 billion a month, which is going to make the housing sector look good. Does this create jobs? No, but it doesn't matter. What matters is all of the uncertainty that's been in the markets the last few years. The financial crisis started over here in 2007. The S&P is breaking out to multi-year highs. They got QE3. We said they were going to get it. Not only that, they are going to have longer-term securities by about $85 billion each month through the end of this calendar year. They're going to drive down rates for an extended period of time into calendar 2015. Now, listen, this is the mechanical part of the FOMC. What we would look forward is that the peoples that have been on the sideline, it's time for you to come back now. And the reason why I say that here on this weekly chart right now is that you got a much bigger boost in the QE3. Now, about China, about Europe, yeah, let's not look at that at the moment. Let's look at where that whole scenario is being injected by the Fed, which we believe is more of a political than what it might end up actually helping the economy. But bulls are started when the majority of the crowd is going to go look at where all of the uncertainty will come off. Pullbacks will be buyable. The markets are currently in overbought status areas, such as the S&P now. There will have to be some pullbacks, but the people that have underperformed and remained on the sideline will come back to equities. Rates will stay low until the middle of 2015. It's not going to pay you to have your money in a CD. It's going to pay you to come here and learn how to make money with SMF. And that bull, well, the Dow was well up over 100 right after the announcement, and we're taking out some pretty key areas. We talked about the 1470 area, 1450 area a couple of days ago, knowing that QE3 could push our S&P to that level. However, the upper level would be, like I say, around 1470, 1472 area now. But the thing about it is, in the very shorter macro term now, is that we're overbought on the S&P. Outside of this good news, and being in the month of September where it could be used the most, right before the elections, and all of the gimmicks that SMF has told people why this was going to get passed, and then where do you go find those bull sectors now? So we're going to go into the earnings season now, and corporations are going to have to deliver on profits. This is just to get the market boosting, but what we're going to be looking at, we told everybody, look, sentiment has to be changed. The sentiment changes, the people on the sideline have to come back to the equities. Bull markets can be manufactured. The sustainability of the longer term outlook is yet to be determined. What we will tell you is that the bear cycle of the market is no longer the depth that it once was. And that if you've been sitting on the sideline with uncertainty, that was fine. It's time for you to think about emerging back in here and taking advantage of what the FOMC did and how the economy, now does it help the economy 100% right away? No, you're going to have corporate earnings, but a bull has to get started somewhere. In this case, it's another round of quantitative easing. QE3 is in full bloom. The other things that we would like to tell you is keeping rates down. That means when you push rates down and keep them way down there, that that will bring you into the equity market if you're looking for a yield and you're looking for a return and you're looking for a trade management, investment managed type plays that you could get involved in that would benefit. This is the time that you would look at doing it. And you would look at doing it on pullbacks. The problem that we have in the short term now is that we're overbought here now with the news. The news comes out, they did it, but the problem is you're not going to get nearly the bang because it's already ran for several weeks in anticipation that they were going to get it, and they bid it up, and most people are on the sideline. It's not too late to get in. What we need now is a new president. But we see today's move more of a political thing than what actually will help the economy, in our view. The way that and they went way beyond what anyone thought. They're going to be purchasing additional agency mortgage-backed securities at a pace of $40 billion a month. You can't ignore that. And other central bankers around the world are going to get excited about how the U.S. did their quantitative easing again. And the old saying is, you get the rest of the world to follow it. All of the concerns that were in Europe, they can kind of go away. Growth will have to return, though. Okay? And it's an election year. We're overbought in the S&P. QE3 is passed. What I will tell people, once again, as we move up to these resistance levels that we've been talking about in our analysis, we're going to hit the top at some point. Bull markets or new bulls that are reborn, they have to have their volatile side of markets too. Meaning that when we go back to the principle of the upper major resistance levels, how do people get involved in a market? Everyone's going to be thinking about this data today. All the people that were on the sideline as of today are going to want to reemerge in our markets. People that have hoarded money in safe havens and money that's on the sideline will return to the markets because their belief will change. The problem in the short term is that we're taking a look at the announcement, but we're taking a look at where we've ran to this announcement at multi-year highs, and I'm extremely 94.29% overbought on the news in the S&P 500. We will be looking where a bull would start to have the ranges. When you get overbought, you have to pull back, how to buy dips, how to identify consolidations moving forward. Has this changed the complete sentiment from everyone being bearish and terrified? Well, look, you got quantitative easing, but you don't know what your taxes are going to be. So small businesses, there's lots of challenges ahead out of this. It's a tradable range is what this is. It's a tradable range to overbought resistance levels that will have pullbacks based on this QE3 announcement. I will conclude the intraday on 9/13 at 9:59 a.m. Pacific Standard Time. The wall of resistance coming back up into the S&P in our analysis is that it was either you were going to drop 100 points or go up 100 points. And equities and indexes in the short term in the calendar year, as of this current date of this current live video with current MMTs, is that we're overbought with this news. So be careful. There will be pullbacks. There will be price volatility moving forward throughout the calendar year. In order to get this S&P back up to 1,500, we would have to have a pullback where new money would come in the market and then drive that bull higher.